Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Friday, June 5th. Participants bid stocks higher in the first few minutes of trading after receiving word that payrolls fell by 345,000 during May. Given that the number of job losses were below the 520,000 that were expected, and that they declined from the 504,000 that were registered in April, many participants warmed to the notion that macro conditions may be improving, or at least resisting further deterioration. That consideration aside, unemployment has reached a near 26-year high of 9.4%, up from 8.9% the month before. The initial lift among stocks took the S&P 500 to fresh 2009 highs, but listless trading left stocks susceptible to an early selling effort, which left the market to trade in a relatively narrow range for the rest of the session. Industrial stocks were able to trade with solid gains for the entire session, though, helping the blue-chip Dow Jones Industrial Average keep a marginal lead over the other major indices during the session. Meanwhile, the S&P 500 finished lower amid broader weakness as its declining issues outnumbered its advancers by nearly 2 to 1. Semiconductor stocks showed weakness after the Semiconductor Association forecast a 21% year-over-year decline in 2009 worldwide sales. Financials and materials stocks were also among the weaker performers this session. Weakness in the materials sector mostly stemmed from a drop in commodity prices, which saw the CRB Commodity Index slide roughly 0.7%. General weakness among commodities came as the dollar index jumped 1.7% in its best single-session advance by percent since January. Traders continued their selling efforts against treasuries. That took the benchmark 10-year note roughly 1 full point lower, which has pushed its yield to 6-month highs above 3.8%. I'm Jeffrey Ham for Briefing.com, and thanks for listening.